Again, sequentially, I think going back to the last time, it made sense to start with Canada and Mexico before you take a more aggressive pivot to China because it has to deal with China. I think with the situation in Mexico, you want to address Chinese circumvention, which is an issue there. And with Canada, you also want to address the issue of critical minerals access because that's a potential choke point that China has, not to mention concerns with respect to the flow of migrants and fentanyl, which suggests to some that there may be an off-ramp here in terms of seeking some concessions. But really, what can Trump do to accelerate the negotiations ahead of the July 2026 date for USMCA? So I think that's sort of the why Canada, why Mexico, why now. In terms of what to watch for, I think Trump runs the risk of sort of being the boy who cries wolf by not following through on some of these things. That said, we're seeing a lot of Wall Street, or a report from the Wall Street Journal suggesting that it's still very much in flux amongst his advisors, which isn't a surprise. They have varying views. I think the Saturday timing is interesting because you could see a situation where, if he does follow through, maybe it's more limited scope.
Welcome to RenMac Off Script, where we're going to discuss markets, economics, policy, history, and life. It's the 31st of January, 2025. I'm Jeff DeGraff.
I'm Neil Dutta.
And I'm Steve Pavlik.
As a reference, we got our charts on Twitter. You can see us here on YouTube. If you are looking, subscribe to our YouTube channel where you'll see these videos. Sometimes we'll put some charts up there as well. Certainly follow us on Twitter. Absolutely. Got a lot to touch on. We're going to talk about tariffs. We're going to talk about DeepSeek. We're going to talk about inflation, confirmations. There's a ton of stuff to go with. Let's talk about a perspective that you have, which I think is really interesting, Steve, which is on picking fights. It feels like maybe the new administration is picking fights almost deliberately, and you think there might be a strategy behind that. Can you expand on that a little bit?
Sure, I do think there's a deliberate attempt here by the Trump administration to pick fights because these are fights they want to have. Trump brandishes himself as a fighter. He's also somebody who is definitely litigious, and that's an opportunity in the sense that you look at some of these early executive actions, and you've seen an attempt to freeze funding, and you've seen an attempt to deal with the federal workforce and dismiss people who I guess, the view of the Trump administration, aren't sharing their priorities is probably a polite way of putting it. And they are expecting legal challenges. And I think there's a reason they're doing this deliberately early on so that these court cases will work their way through the system. During the Trump administration, they're also doing it in a time where you have a 6-3 conservative majority Supreme Court. So if you're going to have to fight, you want to do it now when more of the refs, in theory, are ideologically on your side. A lot of these justices served in administrations and may be more sympathetic to the idea of an expansive view of executive power. So we'll see how the court cases play out. But I think for anybody to sort of think, oh, they're doing this, they weren't anticipating this, I just think that's wrong. Again, I'm not a legal scholar. I'm not sure where these things are going to end up, but I think these are the fights, candidly, they want to have. Now, that said, I think this past week's OMB memo was poorly worded, and that I think played a large part into a decision later on by Trump to pull it down. I don't think he liked the media coverage of it, and I think prior to that, sort of like a lot of going on offense, and this may have reignited the resistance. So I think that's going to be something to watch moving forward.
So in everyday man's language or woman's language, if you're going to start a fight, you start it in your own bar, not the other guy's bar.
Pretty much.
Yeah. Yeah. Good point. All right. So the clock's ticking. We've got tariff looming. What are we looking at in terms of severity, of timing? Is this a last minute back down? Is this the bluff? I start, far at a far extreme position and I walk it back. What do you think the strategy is? And what should we be watching over the weekend? I mean, where does that shake out?
Yeah, we definitely have to timestamp this about 9:15 on Friday morning. Again, sequentially, I think going back to the last time, it made sense to start with Canada and Mexico before you take a more aggressive pivot to China because it has to deal with China. I think with the situation in Mexico, you want to address Chinese circumvention, which is an issue there. And with Canada, you also want to address the issue of critical minerals access because that's a potential choke point that China has, not to mention concerns with respect to the flow of migrants and fentanyl, which suggests to some that, there may be an off-ramp here in terms of seeking some concessions. But really, what can Trump do to accelerate the negotiations ahead of the July 2026 date for USMCA? So I think that's sort of the why Canada, why Mexico, why now. In terms of what to watch for, I think Trump runs the risk of sort of being the boy who cries wolf by not following through on some of these things. That said, we're seeing a lot of Wall Street, a report from the Wall Street Journal suggesting that, it's still very much in flux amongst his advisors, which isn't a surprise. They have varying views. I think the Saturday timing is interesting because you could see a situation where, if he does follow through, maybe it's more limited scope. What is the duration going to be? Do you sort of announce these tariffs are going to take effect in a week or two, giving Mexico and Canada a little more time to sort of provide something for Trump, basically as a political fig leaf, to say here's what they've done, so I don't have to follow through on these. I think that's going to be important. And any exemptions, there was the talk originally about, it's going to be some universal tariff on all products, and according to the journal, if we do see some action, it sounds like there may be some, exemptions there. So I think that's sort of thing to watch. The other thing that didn't get as much attention was, Trump also sent a social media post on Thursday evening warning BRICS countries against any efforts to try to replace the dollar. I don't know that there's a serious effort to replace the dollar as the world's reserve currency, but I do think there is a desire amongst the BRICS countries, sort of the thing that's sort of binding them together, to do de-dollarized trade, to not get caught up in sanctions. And so I think that message is resonating. And that weakens a potential tool that we have at our arsenal. So I understand why he's concerned about that. I also don't think that all the BRICS members share much beyond that in terms of their own geopolitical aspirations. Clearly, Russia and China want to create sort of an anti-US, sort of other center of influence and power. I don't know that the other BRICS countries necessarily share those goals, particularly since a lot of them have more trade, candidly, with the US. So,
Well, you know how you lose your status as the reserve currency, you're a poor steward for capital, right? I mean, that's
mhm.
the bottom line. And look, I think the reality is still we are the best steward of capital in the world. Might be a shitty neighborhood, but we're still the best house in that neighborhood.
Well, I mean, to your point, I mean, do you really, if you're looking around, do you expect China to be a better steward of capital,
Right.
given the Communist Party's control over everything they have going on there? That's why I just don't really see that as a viable alternative.
Yeah.
They don't
So
even
Neil,
they don't have deep capital markets.
right, 100%. Neil, talk to us a little bit about tariffs. So there's some export data in December. What did that imply? Was there any takeaway from that in terms of the looming tariffs?
No, I think the takeaway with that data is that the global economy is sort of sucking wind, and that's hurting our exports. So yeah, I think that's a problem. Um, Europe is, you look at the German and French GDP data in Q4. I think it was slightly negative. We know the UK economy is not particularly strong. It looks like Mexico contracted in the fourth quarter. So a lot of our major trading partners don't look so hot right now, and that's weighing on exports. And that's exactly what we saw towards the end of last year.
Well, that just gives tariffs, or I guess the leverage portion of tariffs, more bite, right? I mean, if you've got a weaker economy and somebody's threatening tariffs, that's certainly something that you'd have to consider in the calculus. If you're booming and somebody's going to give you tariffs, you're like, okay, well, we can probably weather that storm. But if you're on the ropes, so to speak, that's got to be a little, just in terms of the political calculus, it's got to be a little bit more of a consideration. No.
Well, I do think that, I mean, it is interesting to see how markets respond to tariff news. I mean, we kind of saw this play out yesterday, right? So there's a headline that comes across, 25% tariffs on Canada and Mexico. We're still looking at China, something of that nature. And you can see what happened in the financial markets. The dollar rose. I mean, you had a pretty big reversal in the dollar. The dollar was, I think, down a couple tenths that day, yesterday, and then it was up a couple of tenths by the end of the day. And oil prices rose. So we know that President Trump doesn't like a strong dollar and he doesn't like higher oil prices, right? But the tariff news got him that. I mean, I think the interesting thing with obviously the currency, right, is if their currency, if the other countries' currency is weakening, that means that their country is getting poorer, which presumably makes it more challenging them to absorb exports in the first place, right? So it's almost a double whammy because it's slowing global growth while making prices higher for domestic consumers. But look, tariffs are basically the price of entry to for those in Trump's orbit. Okay, and I would just say that Mexico and Canada are a very interesting choice for Trump's ire on trade because they both run trade deficits. Okay, so they're both absorbing excess savings from the rest of the world, just like we are. So, and obviously, most trade is dictated by the gravity model, which is basically saying that, the countries that you're closest to are the ones that you're going to be trading with the most. And that's more or less the case for us. And, to me, that's not to say that there aren't imbalances in the global trading system, but I think the ire would be more useful if it was directed towards China. And, I mean, and that's true for everyone in North America. It's in everyone's interest in North America, Mexico, Canada, and the US, to see China increase their level of domestic consumption, because that's really the primary source of the problem. These bilateral spats are small potatoes compared to that. And so, I mean, maybe he can say, look, I'm going to do these tariffs on Mexico and China and Canada, but maybe you can convene a summit and we can agree to put, tariffs all on against China or something. I don't know. I mean, that would be actually quite fruitful. I was recently in Mexico City for Martin Luther King weekend. And one of the things I was shocked to see was the amount of BYD cars there. Right? So why is that happening? You don't see them here. You see them there.
It's to avoid U.S. trade restrictions. It's exactly what's happening.
Exactly. Right.
That's an interesting place to celebrate MLK weekend, Mexico City. I've never been, actually. I've been in almost every major metropolitan area in the world,
I think
other
it would
than
be
South
good for
America.
you because I think it would be very good for you, actually, because you could go there, you could have the street tacos and come back a few pounds lighter.
Yeah. The last time I was in Mexico, this is a true story. I was probably like 10 or 11, and you never see it because I got a hat on, but I had blonde hair, kind of very blonde hair. And walking down the streets of Mexico, I mean, like it happened at least 10 times. I'm like, what the hell's going on? People would rub my head because they'd never seen a blonde kid before. They're like checking it out to make sure it was real. It was the weirdest thing ever. Still scarred from it. Wasn't that bad, but I just thought it was pretty interesting. Just for the record, because you're a classical economist, and a classical pianist too, I believe. But
Don't offend me like that. I'm a business economist. I'm not a.
okay, sorry. Um, just describe what a negative supply shock is, because essentially a tariff is a negative supply shock. So what does that do in sort of standard business economist terms? What is that?
Growth weakens, prices strengthen.
That's it.
That's what it means. I mean, to put it simply, I do think that the result of tariffs will generally be that the growth effects dominate, will dominate the conversation. I do think it's kind of unclear exactly how the Fed responds, because at his press conference this week, Jerome Powell did say, I'll pull the quote for you. We also hear a lot from companies these days that consumers have really had it with price increases. So there's an open question about if these tariffs are done, who actually bears the cost? It could just come out of corporate profit margins, in which case consumer prices would go sort of unscathed. But at any rate, it kind of encourages the Fed to kind of stick in this wait and see mode that they're in And as I've said before, this raises the risk of passive tightening. To me, that's kind of what's changed over the last number of months, right? Which is back in September, the Fed was clearly preemptive, taking out insurance against potential downside risk to the economy. Now they're waiting for bad news to cut more, right? And that's tempting fate. If you wait for bad news, you may end up getting it. And that lack of sort of a preemptive approach to policy easing, I think, um, raises the risk of passive tightening. Just this morning, we see continued evidence that wage and price inflation are cooling, right? Core PCE has been below 2% for the last 2 months. The employment cost index shows a continued slowing in compensation and wage and salary growth. And I think it stands to reason that a lot of these trends will probably continue into the first quarter. And we know that the Fed isn't doing anything in Q1. So to me, it kind of reminds me a lot of the June 2024 to September 2024 period, where June 2024 was sort of like peak hawkishness out of the Fed. And 3 months later, they're cutting 50 basis points. You can see something similar over the course of the next few months, because I don't think growth is nearly as strong as everyone is claiming it is. And we see continued weakness in housing activity through January. Now, maybe some of that is wildfires, okay. But we do know that pending home sales collapsed at the end of the year in December. So that's going to mean that we have weak sort of closing activity in this quarter. And yeah, I mean, consumer confidence has slowed. That probably, creates a yellow flag for consumption and employment to some extent. So I think that there's a lot to be worried about right now. And this sort of Fed kind of adopting this wait and see approach means that if the data weaken and then just sort of sitting back and watching, you get this sort of passive tightening risk, which will then weigh on financial market conditions, and then you get the Fed response. So, the weakness in financial markets has to happen first, and the economy before the Fed cuts.
Right.
So I think that's
But
that to
at
me.
least we're seeing that contraction. I mean, yields have come off the boil a bit, right? They're back to support at basically 450. The 2-year yield actually looks more toppy, if you will, than the 10-year for sure, no doubt about it. So the 2-year yield is more in that distribution potential lower lower side of the ledger, if you will, on that. But you bring up an interesting point that I want to bring Steve in, which is, are these tariffs to Mexico and Canada really a lever position where Trump can come back and say, you know what, if you want to avoid tariffs, let's unify as a front against China? Is that a way to bring them to the table? And I mean, is this kind of this chess move politics, or is that asking way too much from this administration?
I don't think it's asking too much. I'd be surprised if that's not one of the things being discussed. I think you have to look at what's in Canada and Mexico's interest. I mean, Neil was talking about BYD. I mean, Mexico's benefited a lot from having a lot of Chinese investment there. And China's benefiting a lot because they're avoiding US trade restrictions. So I think that's probably part of the goal. And again, going back to if you want your real leverage to take on China, it's putting up more of a united front. So I think that is part of the objective here. One thing I would mention, we talked about the sequencing, but also think about the sequencing last time 8 years ago, where you had this tax cut for corporations before you pivoted more aggressively on the tariff front. So in theory, corporations had a little bit more room at the margins to maybe pass along some of those price increases. I don't think that's going to be the same this time because the corporate rate is not really on the table. And I know President Trump has suggested a 15% rate for domestic manufacturing. I haven't heard many congressional Republicans share his enthusiasm on that, just because I think they're concerned about adding to the deficit. So I think that's sort of an important thing to consider this time on that sequencing domestically versus last time.
Well, as we close out the month of January, we still have obviously Friday to go. I think what's really interesting is every single sector in the market is up with the exception of tech. As of the open this morning, tech was down a little over 2% for the month of January. Biggest winner, comm services. You could say that that's tech because Meta's in there, Google's in there. There's several software-ish type of company. Netflix is in there. So that's not a complete picture, but it gives you some idea. And then next is financials, and then after that is healthcare. But it kind of gives you a sense that tech has come off the boil. And obviously, with the news with DeepSeek, we've seen that reverberate through semiconductors. And we spent some time on that in our survival guide this week on Tuesday, which I'm happy to talk about a little bit. But one of the things that gets thrown out there is this notion of, I'm sure I'm going to pronounce it wrong, but Neil, I'm going to ask you about it. Jevon's paradox, which is an economics term. I always find like the paradox is kind of a weird thing in economics, where once you really kind of get into it, that the paradox has become less paradoxical. But what are your thoughts about Jevon's paradox and the implications for semiconductors or AI for that matter? Any insight?
Not really. I mean, Jevon's paradox is basically what? I mean, if
Wait,
something,
wait. Is it Jevons
I have
or
no idea.
Jevons? All
Whatever.
right.
I don't
Yeah.
care. I don't care.
Depends on what side of the Bronx you're from.
I'm sure someone dedicated a page to it in their economics 101 textbook. But it basically what is it's like sort of it becomes more efficient to use something. You would make the assumption that less of that thing is demanded, but because it becomes more efficient, the demand becomes strong because the cost is going down, right? So I mean um, and governments typically assume less consumption of those things that become more efficient to use. So it kind of goes against that assumption a little bit. To me, I think it's a productivity story, and at some level.
100%.
Um,
100%. Keep
so
going.
I don't. I mean, obviously, there's the initial kind of market reaction, which is like, okay, it's being done a lot cheaper. So why the hell are all these companies investing so much money in it? If it can be done for a lot less money. And so I think, investors probably ding these companies for that reason. But when you take a step back and look at the big picture, it's basically a sign that productivity is likely to be stronger going forward. If that's what's happening, really. I mean, I don't know. I think it's a little bit, I don't make any sweeping calls on productivity ever, really. So, but that to me is I think the big story is you have to bring it back to the productivity story, and it basically means that that productivity is likely to be somewhat stronger than it otherwise would have been.
Yeah, it kind of falls into the, in the long run, all tech companies make toasters, right? 100 years ago, the toaster was cutting edge, and only the affluent had it, and now everybody has it, right? I actually remember a story, and if he's listening, he knows who he is. He came into my office in 1998, and he's like, "It's a bubble. Like this is it." He goes, "I just saw, what do we call it? A lady of the night." With a cell phone, with a mobile phone. Like that's it. Like if they can afford it, like that's it. And I had to explain to him, like, no, what happens with productivity and technology is it gets cheaper and cheaper, and it proliferates so everybody can have it, including you and the ladies of the night. That's just kind of the way it works. And actually, from a business standpoint, it's probably smart that she has one, to be honest with you. So she was cutting edge, I'm sure, at the time. But let's talk a little bit about DeepSeek. I thought one of the interesting quotes, I think this was from an Intel guy, and if I get it wrong, I'm sorry, but this applies to economics too in my book, because, when I boil it down for my kids and try to keep it as simple as possible, I always tell my kids economics is nothing more than about choices, right? You can't have your cake and eat it too. It's about this or that. It's called utility, it's priorities, et cetera. That's kind of the way it works. And there was this quote about DeepSeek, which I thought was interesting, that said, engineering is about constraints. The Chinese engineers had limited resources and had to find creative solutions. 100%, right? So the idea is if they can do it more efficiently, then all of a sudden, you can start employing AI into things that may not have been, but put it differently. You can start employing AI in things that AI might have been cost inefficient or just didn't make any sense, right? Now, all of a sudden, if it's cheap enough, maybe AI is on your shopping cart, right? Maybe AI is in just things, maybe it's on your toaster. Like, who knows? Like, if AI becomes prolific enough and cheap enough, then supply finds its own demand. So I think that that's super important. But let's talk a little bit about semiconductors because we're getting a lot of questions on that, and I think it's certainly worth talking about. I don't think that semiconductors, to me, what happened recently, and I can't put my finger on it exactly. It's kind of a blink moment. I've been doing this for 35 plus years now. I remember in early 2000, this is the peak of the internet bubble. Things were going bananas. We were certainly wary of what was happening. President Clinton came out and he made a statement that the genome was going to be public information. Now, there were at least three, I'm sure there were more, but I remember three companies that were really just, hell bent on sequencing the genome and profiting from it. And I'm sure people will tweet and tell us who they are because I don't remember them off the top of my head. The idea was, though, all of a sudden, these, quote unquote, profitable companies seeing out into the future that they were going to solve all these problems and actually license the genome and then obviously be able to extract a toll from them. Suddenly the game changed for them, right? Because it was going to become public information. And that changed the mindset of what people were doing and what they were willing to value, not obviously only in the biotech space, but also in technology generally. It was kind of like an eye-opening moment where everybody was on one side of the boat and people said, wow, there's space on the other side of the boat. And that's what I think you have to consider with this DeepSeek. Again, I can't put my finger on it. It's more of kind of a feeling I have that maybe DeepSeek just kind of shook the boat enough that people say, this isn't just a one-way street, and these chips aren't, just one dimensional, and we're going to be stuck with having to own whatever NVIDIA has. Maybe it actually ends up being something that not bad for NVIDIA, but maybe not great for NVIDIA's pricing. And the reason I say it's important is because the sentiment where people have been with the option activity, what we see, and the expectations going forward is so extreme that they're priced more than to perfection. And it's not that units don't go up, to Jevon's paradox, but it's just a matter of, can you meet those expectations that are built in? And one of the things that we look at, in fact, we put it on Twitter, is just the relationship between the market cap of semiconductors to the overall market, which is X. I don't know what it is off the top of my head, but we compare that number, that percentage, to their revenue contribution to the overall economy, right? And right now, that number's running, to the stratosphere. It's where it was back in 2000. In other words, those expectations, even though there's growth there, those expectations of how the market's pricing it versus how much revenue they're producing today as a percentage of GDP is literally off the grid. So when you're priced to perfection, your valuation's priced to perfection, you shake the tree a little bit and, a few things tend to fall out. Sometimes they're apples, sometimes it's the hornet's nest. So you just got to be careful with that. So as we see it, semis, and by the way, semis in our work, and this is not a victory lap, this is just how we see it, and clients know this. Semis in our work deteriorated to a negative relative strength position. That's bearish for us in late summer, early fall. So this has been something that's been going on for almost 6 months now. And this news, the market has seen it. You can look at the AMAT charts, the micron charts, etc. Those are still in a pretty vulnerable space. NVIDIA not as vulnerable, but certainly has moved to a neutral in our work, and that's after having these sentiment extremes. So I think you have to be careful there. We're looking at software that looks pretty interesting. Financial still leadership, as we said, second in the market, only to comm services last month, and then some improvement in healthcare. Healthcare equipment seems to be trying to turn. It's not ubiquitous, but if you're looking for early ideas, start sniffing around in some of the healthcare equipment spaces. All right, so new segment this week came from popular demand, where we posted on Twitter, and by all means, clients, please email us if you have a question. But we thought some participation would be interesting. We didn't want to get technical. We didn't want to talk about Jevon's paradox and these other things. Something that's a little broader. So we're going to bring in our mailbag expert, RenMac mailbag expert, Harry Chen. Harry, what is the question this week?
Okay, the question for this week If Jeff was on an island for a year and could only bring one equity market indicator with him, what would it be?
Thank you, Harry. All right. So if I'm on an island for a year, what equity market indicator would I bring? A lot of people would think about value. I think value is important, but it's not a very good timing indicator. If you think about how we think about the world, you really have two choices. You can be a mean reverter, which would be looking at things like down is good, up is bad, and because that has to mean revert, that's okay, but it's not great. Basically, the way that you make money is in trend following. I think probably the best indication around that that keeps you on the right side of the trade, and it also has the added benefit of being a momentum indicator would be a MACD. That's a moving average convergence divergence indicator. So they're basically measuring the spread between two moving averages. Pick your choice or take your choice. And if it's above that zero line, it means the trend is positive. It's below that zero line, it means the trend is negative. And if it starts to diverge, in other words, price is going up while that is going down, or price is going down while that is going up, it starts to tell you that momentum is slowing. So as just a purist, I would think about it from a MACD standpoint. Now, if you said I get two, I would probably throw valuation in there from a longer term perspective, and finding cheap names that are going up is certainly better than cheap names that are going down. And obviously, expensive names that are going down is really the Venus flytrap in this business, if you will. Steve, a lot going on. Who gets the confirmation? Who doesn't? What do you see next week?
Sure. So confirmation is definitely one thing to watch because, up until now, I think most of the picks, as we've seen, have been pretty straightforward in terms of they were likely to be confirmed. I think Tulsi Gabbard's probably the one who's most vulnerable right now. We'll see if Senate Republicans try to communicate to the White House that her prospects aren't good. They don't want to embarrass the president by having a failed vote. So that's something to watch for to see whether or not her nomination is pulled, and whether or not that also applies to RFK Jr. for Health and Human Services Secretary. Again, it's unusual to have a failed vote, and I don't think that's something President Trump would want. I think Kash Patel for FBI director is probably more likely to make it through. May benefit from being sort of paired along with those two. I'd also watch for Howard Lutnick, Commerce Secretary. You talk a lot about semiconductors. My sense, given some of the concerns over DeepSeek, is that they're going to be more export controls targeting them, specifically NVIDIA. And there's a lot of debate whether NVIDIA was following the letter of the law, but not necessarily the spirit of the law. And they could be a potential target moving forward. So that's something to keep an eye on. Then I think, outside of that, keep an eye on the tariffs as well. And then lastly, House Republicans, they had to retreat this week to try to find a way forward on their budget reconciliation plans. Reports suggest they're not really coalescing behind a particular plan. That's not necessarily good for Speaker Johnson's timeline. He wanted to have a budget resolution vote next week, so we'll see whether or not that's still in the cards. So that's sort of the the big issues to keep an eye on for next
Where
week.
do the Republicans retreat? Do they
They
go
were
to
actually at
Massachusetts? Where do they go? Where do they
in
go?
Miami
Vermont?
at Trump's Doral.
No, that doesn't make any sense. I guess the gun ranges in Texas were full, huh? They couldn't. So what, putting you on the spot here, what are your handicapping probabilities on RFK Jr., on Tulsi, on Cash?
On Gabbard, I would say 35%. RFK, it's a cop out, but it's sort of closer to 50, maybe 45.
Does he get any Democrats to come over? I mean, he's
Wow,
going to need them.
with that coin flip call you're giving, you're making economists look good.
Well, I'll say 45. I don't. I'd be surprised a little bit now. I had him probably 60 heading into the hearing.
Isn't the RFK thing really just a call on whether you think Bill Cassidy wants to be a senator anymore, right?
Well, he voted against
I
Trump
mean,
on
it's
the
just like,
impeachment.
it's
No,
really
I know,
that
but
simple,
but
right?
that
Like,
sort of gets to Jeff's question. Is there a Democrat that might be able to offset that vote so he still gets confirmed? And in DC, a lot of eyes are actually on Sheldon Whitehouse, not usually somebody you would see coming to defense of President Trump's picks. Apparently, Sheldon Whitehouse and RFK have a long friendship, People can Google and see what that friendship entails, but that he may be a dark horse to keep an eye on.
Neil,
Oh, and then
so,
Cash Patel, I think probably 75-80%.
wow, all right.
Maybe even higher that he's going to be confirmed.
Well,
mean, it's pretty.
I would like to point out that if it wasn't for Donald Trump nominating Cash Patel, we would not hear the words Jai Shri Krishna uttered at a confirmation hearing. That's a greeting that Gujarati Indians typically greet people with. So
That's gonna be you next week on the
big
pod.
fan of Hindu. That's that's one of Trump's classic lines. Big fan of Hindu. And Trump was one of the only presidential candidates in my memory to ever cut an ad on Diwali. And anyway, it's paying dividends for the Indian community, interestingly enough.
Probably, I would say, at least in terms of high exposure, probably the most Indians, wouldn't you? Or is it just there's more exposure with the
Well,
Trump?
look, I just think it's kind of fascinating that when the Democrats, I mean, this is all tongue in cheek, when the Democrats nominate Indians to their cabinet, it's usually such roles as Surgeon General, head of CTO of the White House. Wow, shocking. You put an Indian in as your top doctor and your top tech guy. Great. Haven't seen that happen before. When Trump does it, it's FBI.
Right.
Director
Right.
of National Intelligence.
Right.
First lady too.
Huh?
The second lady, I guess. Second
Yeah,
lady.
second lady.
True. Right.
Yeah. Well, we're going to be watching next week. The 2-year yield, the 10-year yield, still think that there's an awful lot of importance there. Not as important as triple B spreads. And so if we're, two things here. If we're going off the rails on that, you're going to see, obviously, there's some refinancing that has to take place with Twitter, now known as X. So we'll see what the credit markets say about that. And just, kind of this equity raise that's happening in AI. Do the valuations start to come down because it becomes a little less known how that's going to look going forward? So I think that's important, kind of reality of sentiment meeting what the requirements are for the return on invested capital. And that always ends up being an important crossroad there. It's my Biden moment. What I want to say is I forgot that question came from Greg on Twitter. So Greg, we appreciate that in the mailbag, and we're going to send you a RenMac hat. I was in the RenMac storage unit this week looking for some things, and I found a box of hats. So this is the classic. This is the first one. And so we're going to get Greg a hat. And if you submit a question that we use on the pod, we will send you a hat as well. All right, join us again next week. We'll be 1 week older, 1 week wiser. Don't forget to follow us on Twitter, subscribe to our YouTube channel.
Wait, you forgot to ask me what was going to happen next
week.
We have a huge week.
Oh, you went off on your Indian tangent. I'm sorry.
I mean, that's another Biden moment. Then he didn't follow up.
Go.
There's a lot of data coming out next week. We're going to get updates on employment, importantly. So we get December's JOLTS data, and then January we get the payroll data. There's going to be revisions. Keep an eye just on the ratios, unemployment, and we're going to get revisions to the establishment survey. Market's looking for 150,000 on non-farm payrolls. Obviously, we get ISM as well. There's not much going on in manufacturing. I mean, we just got the Chicago PMI number this morning and it was below 40. So manufacturing doesn't look great in my opinion. But it's going to be a week chock full of economic data.
Join us again next week. We'll be 1 week older, 1 week wiser. Don't forget to follow us on Twitter and subscribe to our YouTube channel. Until then, I'm Jeff DeGraff.
I'm Neil Detta.
And I'm Steve Pavlik.
We'll see you.